Good morning and welcome to today's hearing on the complexities and challenges of ensuring Social Security coverage and payroll tax compliance for state and local government employees. Before we begin, I'd like to take the moment to say a few words about my friend and former Social Security Subcommittee Chairman, Jim Bunning. You remember him?
Yeah, absolutely. Yeah.
Sadly, Jim passed away just a few weeks ago. Chairman Bunning was a member of the Ways and Means Committee for 4 Congresses, and he chaired this committee. While many will remember Chairman Bunning as a baseball Hall of Famer who pitched 2 no-hitters, by the way, I'll always remember him as a guy who showed me the ropes on serving as chairman of Social Security. Among many other bills, he introduced the Rehabilitation and Return to Work Opportunity Act of 1996 that ultimately became the basis of the Ticket to Work Act of 1999. More than 20 years later, this subcommittee continues to look for ways to help those beneficiaries who can return to work. And I look forward to having another hearing on that topic later this year. Jim Bunning was a patriot, a strong supporter of Social Security, and a friend. We are thankful for his service and keep his wife Mary and all his family in our prayers. Turning back to today's hearing, unusually when we talk about state and local workers and Social Security, we talk about how many of them aren't covered by Social Security. But today we're going to focus on the close to 3/4 of state and local workers who are covered and why figuring out their Social Security coverage and payroll tax compliance is so complicated. What Social Security was created for and when it was created, state and local government employees were excluded due to constitutional concerns. Over time, the law was changed to allow state and local governments to extend Social Security coverage to their employees. Today, all states have at least some employees who are covered by Social Security and pay Social Security taxes on their earnings. But who is covered can vary by state and even locality. With all this complexity, it's up to Social Security, the IRS, and the states to work together to get it right. But as we'll hear, that doesn't always happen. Back in 2010, the Government Accountability Office found that both Social Security and the IRS have trouble identifying problems with Social Security coverage for state and local government employees, and instead must rely on public employers to ensure compliance. Not much has changed, has it? Social Security still does not have the ability to verify that state and local governments are properly reporting wages for covered workers, and the IRS still doesn't know whether the employees reported and paid the correct amount of payroll tax without doing an audit. Even though payroll taxes are the biggest tax most people pay, efforts to improve compliance generally focus on other taxes. These problems, like the one in Missouri that we will hear about today, can go undetected for years and have real consequences for Americans' retirement security and for Social Security's trust fund. If someone thinks they're covered but aren't, according to Social Security now, they may not qualify for Social Security benefits that they've been counting on. And if an individual receives benefits without having paid the correct amount of Social Security tax, the Social Security trust funds and taxpayers are left to make up the difference. Let me be clear. The answer here isn't mandatory coverage, but Social Security and the IRS need to get their act together. At the end of the day, we need to be sure that state and local employees pay the right amount of tax and receive Social Security benefits they're counting on, and that the Social Security Trust Fund gets the taxes that they're owed. The American people deserve nothing less. I thank our witnesses for being here today, and I look forward to hearing their testimony. I now recognize Mr. Larson for his opening statement.
Thank you, Mr. Chairman, and thank you, Chairman Buchanan and my distinguished colleague, Mr. Lewis. I'd like to welcome back Chairman Johnson. As often as I get to say this, I will, but to be seated at this dais between two iconic American heroes in Sam Johnson and John Lewis is in and of itself, I think, for every member of this committee and the body in general, an honor to serve with perhaps two of the greatest Americans in the history of our nation. With that, Mr. Chairman, I'm also going to renew my pledge or request, I would say is better put, to have a hearing down in Plano, Texas, in as much as, and I know you've had hearings there before, but in as much as this is your last term, I only think it fitting that we had a hearing down in Plano, Texas, preferably during the winter up here, but I'm not saying whenever you call for that.
Thank you.
Listen, also a sad note on Jim Bunning. I would also like to note, not of the stature of Jim Bunning, but equally important to me and many people in the state of Connecticut, Lillian Marlowe passed last evening as well. Not known to many at this dais. She was the, like so many people who work on this staff, just an extraordinary person who kept government running with her hard work and wit and dedication. I just wanted to recognize her here today. Social Security is important to all Americans, and as I like to say when we're out talking about it, where could you find in the private sector guaranteed retirement income that cannot be outlived, protection in the event of a career-ending disability, life insurance for families of a worker who dies, a full cost of living adjustment to combat the effects of inflation. Social Security is also portable and goes with you everywhere. There simply is nothing on the private sector market that can even remotely come close to touching Social Security. Today, 94% of workers in the United States are covered by Social Security. They and their employees contribute to the trust fund and earn their benefits with every paycheck, with half of the contributions coming from the employee and half coming from the employer side being tax deductible. But it is the responsibility of the employer to ensure that they are in compliance with payroll taxes. The only large group of workers that are outside the Social Security are some state and local government workers who have their own pension plan in place of Social Security. About 3/4 of the state and local workers participate in Social Security, but about a quarter don't. In my own state of Connecticut, teachers have a separate retirement plan and are not participating in Social Security, but they have an alternative plan that they pay for. Regardless, the fundamental principle is one way or another, every American should have basic retirement coverage at work. Our job today is to make sure that that's the case. For the 90,000 units of state and local government in the United States, it can be complicated sometimes to determine which employees are participating in Social Security and who pays into the state plan, as Mr. Johnson has already outlined. But when mistakes are made, workers' financial security is at stake. That's why this hearing today is so vitally important. I thank our witnesses for being here. It's also why we've introduced the Social Security 2100 Act, because we believe so strongly that Social Security needs to be expanded and needs to be made solvent into the next century, and so that it's there for every single American and providing the kind of benefits with the greatest efficiency. And with that, Mr. Chairman, I'll yield back my time, and again, it's great to see you.
Thank you. I appreciate that. Thank you so much. Would you like to make an opening statement?
Yeah, thank you, Mr. Chairman, and I'd also like to comment on Jim Budding as a young kid growing up in Detroit. He was a hero to a lot of us. He was an incredible pitcher, and I know he served here in Congress, so I share your thoughts with him. Good morning. I want to thank the panel for coming today, and I look forward to the hearing. I also want to thank Chairman Johnson for his important oversight work. Today we are looking to better understand the challenge that state and local governments face when applying Social Security coverage to their workers. While many states and local government workers rely on their own retirement plans, others rely on Social Security through voluntary arrangements between the state and the Social Security Administration. Giving states flexibility on coverage decision is important. However, it often leads to complication, individual coverage situations for state and local employees. This creates a unique challenge for state and local employees as well as the Social Security Administration, the IRS, who oversees these programs. Nearly 70% of the $3.3 trillion collected by the IRS comes from employment-related taxes like those for Social Security and Medicare. These contributions must be accurate. However, the complexity of the coverage issue for state and local governments require a combined effort on terms of the Social Security Administration, the IRS, and the Social Security administrators to provide state and local employers with appropriate guidance and oversight. I look forward to the hearing and also look forward to our witnesses so we can assist them to ensure that we better work together. Also, I'd like to just add, I want to make sure that the information we get today that we can clearly work with you. I yield back.
Thank you, sir. I now recognize Mr. Lewis for any opening statement you
Well, thank you very much, Mr. Chairman. Chairman Johnson, Chairman Buchanan, and Ranking Member Larson, and fellow members, good morning, and good morning to our witnesses. Thank you for being here. Chairman Johnson, thank you for remembering Jim Bunny. We came in the same class.
Did you?
In the same class. Wonderful, wonderful man. He played well, baseball well, but he played well as a member of the House and the Senate. And my prayers go out to his family. Every working American should have basic retirement coverage. This can be provided through Social Security or through a state retirement system for public sector employees. These benefits help ensure that Americans maintain a basic standard of living during their retirement. 94% of American workers receive their basic retirement coverage through Social Security. However, about 6 million state and local government employees do not. These workers participate in their state retirement system and generally include teachers, firefighters, and police officers. In my home state of Georgia, more than 180,000 state and local employees are not covered by Social Security. State and local governments often have their own retirement system. However, these governments have the option to enter into voluntary agreement with the Social Security Administration to have their employees covered by Social Security. If a local government decides to provide coverage through Social Security, its employees must pay federal payroll taxes just like every other American workers. Today's hearing will look at how federal and state agencies work together to provide Social Security coverage to state and local government employees and ensure compliance with payroll taxes requirement. We will learn from the witnesses more about how the Internal Revenue Service, the Social Security Administration, and state administrators work together to ensure governments comply with payroll taxes requirement. I look forward to receiving recommendation from all of our witnesses how to improve compliance. And again, I want to thank you for being here this morning. I yield back, Mr. Chairman.
Thank you. As is customary, any member is welcome to submit a statement for the hearing record. Before we move on to our testimony today, I want to remind our witnesses to please limit your oral statements to 5 minutes. However, without objection, all of the written testimony will be made a part of the hearing record. We have 3 witnesses today. Seated at the table are Mariana Lacanfora, Acting Deputy Commissioner, Office of Retirement and Disability Policy, Social Security Administration. Well, that's a mouthful, isn't it? Marianne Matza, Legislative Committee Chair and past President, National Conference of State Social Security Administrators. Ms. Lacanfora, welcome and thanks for being here. Let's see, did I miss somebody? Marianne Matza, Legislative Committee Chair and past President, National Conference of State Social Security Administrators. Thank you for being here. Okay, Ms. Lowe, welcome. Please proceed.
Chairman Johnson, Chairman Buchanan, Ranking Member Larson, Ranking Member Lewis, and members of the subcommittees. Thank you for inviting me to discuss Social Security coverage for state and local employees. I'm Mariana Lacanfora, Social Security's Acting Deputy Commissioner for Retirement and Disability Policy. About 94% of employees in the United States are covered by Social Security. That is, they pay Federal Insurance Contributions Act, or FICA taxes, on their earnings up to a certain limit. Those earnings can qualify them and their families for benefits under our retirement, disability, and survivors insurance programs. There are approximately 23 million state and local employees, and about 1/4 of them are not covered by Social Security. My written testimony provides the long history of coverage-related laws for this group, but in short, when Social Security was enacted in 1935, no state or local employees were covered. Over time, Congress amended the Social Security Act to allow states to decide whether to cover employees who fall under a state retirement system and to require coverage for those who do not. The method used by the states to establish coverage is called a 218 agreement, after the authorizing section of the Act. These agreements specify which positions are covered. Every state, Puerto Rico, the Virgin Islands, and 60 interstate instrumentalities have a 218 agreement with us. Over the years, each agreement has been modified numerous times as political subdivisions, positions, and retirement systems have been created, and as groups of employees have petitioned their states to obtain Social Security coverage. Under current law, there is tremendous variability in which positions are covered between and even within the same state. For example, if 2 teachers are working in the same position in the same school district, one might be covered while the other is not. Each state and local employer is responsible for applying the terms of their state's 218 agreement, accurately reporting earnings to SSA, and appropriately withholding FICA taxes for covered employees. Each state has a designated state Social Security administrator. This state official is critical in ensuring that the state gets its employees' coverage status right. The administrator performs many functions, such as being the point of contact with the SSA and the IRS, interpreting the 218 agreement, and educating state employers and employees. They also hold referendums and notify us of the creation or dissolution of state entities. The IRS also plays a critical role in this process by performing compliance checks to ensure that states have appropriately withheld and remitted FICA taxes for covered employees. Given the complexity involving state and local employee coverage, it's no surprise that employers sometimes make mistakes. SSA is committed to working closely with our state partners and the IRS to provide the tools and training that states need to get these decisions right from the start and to address issues when they arise. I'd like to highlight some of the actions SSA has taken to improve this process since GAO's last review. We worked with the IRS to develop a tool that states can use to ensure compliance with federal tax requirements. We designated an employee in each of our regional offices to serve as an expert and point of contact. We scanned nearly all of our agreements and modifications, including tens of thousands of pages, into a central database to allow for ease of access and search. We modernized the system our employees use to resolve differences between the earnings reports sent to SSA and IRS. We updated and clarified our policy guidance based on our experience and feedback from state administrators. We developed comprehensive training materials and resources for the administrators and provided training sessions to state and local employees. We established standing meetings with representatives from the IRS and the National Conference of State Social Security Administrators to share information and best practices and identify challenges and solutions to issues that arise. In addition, we recently started a project to compile and maintain lists of covered positions based on the 218 agreements, which will be a valuable tool and quick reference for the administrators to identify coverage issues. We're also reviewing our regulations to identify areas that we might streamline or clarify. We remain open to ideas regarding how to further enhance our valuable relationship with the states and the IRS as we work together on these issues. Thank you for the opportunity to describe the history and complexity of Social Security coverage for state and local employees. I would be happy to answer any questions.
Thank you, ma'am. Ms. Lowe, welcome. Please proceed.
Chairman Johnson, Chairman Buchanan, Ranking Member Larson, Ranking Member Lewis, and members of the subcommittee. Thank you for the opportunity to testify on issues surrounding the proper withholding and payment of Social Security and Medicare taxes in regard to state and local government employees. Mandatory Social Security and Medicare coverage for state and local employees is a relatively recent development. Under the original Social Security Act of 1935, state and local government employees were excluded from Social Security coverage. Beginning in 1951, states were allowed to enter into voluntary agreements with the federal government to provide Social Security coverage to public employees. These arrangements are called Section 218 agreements because they are authorized by the Section 218 of the Social Security Act. In 1991, Congress made Social Security coverage mandatory for state and local government employees who were not already covered by a Section 218 agreement. But this mandate does not apply to employees participating in a qualifying public retirement system sponsored by their government employer. So, today, Social Security coverage of government employees varies greatly among state and local employers. In general, employers are required to withhold Social Security and Medicare taxes from employees' wages and also pay the employer's share of these taxes. Employers are responsible for furnishing Form W-2 wage and tax statement annually to each employee from whom income, Social Security, or Medicare tax was withheld. Employers above a certain size report quarterly to the IRS on total wages, wages subject to Social Security and Medicare taxes, and federal income taxes using the Form 941, Employer's Quarterly Federal Tax Return. Smaller employers file annually using a Form 994, Employer's Annual Federal Tax Return. For state and local employers, determining proper withholding of FICA taxes for employees is especially challenging because some or all employees may or may not be covered by Social Security. For example, a school district may provide a qualifying retirement system only for a particular group of employees who meet certain criteria, such as teachers, making that group of employees exempt from Social Security coverage. The IRS has the responsibility for ensuring that all employers, both public and private, properly withhold and pay Social Security and Medicare taxes for their employees. The IRS and the SSA routinely match Social Security and Medicare wages on Form 941 with amounts reported on Form W-3, the transmittal of wage and tax statements, and follow up where there are discrepancies. In addition, the IRS reviews employment tax return information to classify returns for potential discrepancies that would indicate compliance action should be taken, including an audit. The IRS, through our federal, state, and local function, has provided extensive outreach services and training to units of state and local governments. As indicated above, we conduct audits to evaluate employment tax and information reporting compliance at the state and local level. The IRS also works with the SSA and state Social Security administrators on an ongoing basis on significant issues related to Social Security and Medicare coverage of public employees. This includes coordinating, when necessary, with the SSA or state administrators when there's an audit of a public employer. We look forward to continuing collaboration with state and local government employers, the SSA, and the state Social Security Administrator to ensure that Social Security earnings are accurately reported for public employers. This concludes my statement. I would be happy to answer your questions.
Thank you, ma'am. Ms. Motza, is that correct pronunciation?
It's Matzo, but that's close enough.
Thank you. You're welcome. Recognized. Please proceed.
Thank you. Chairman Johnson, Chairman Buchanan, Ranking Member Larson, Ranking Member Lewis, and members of both subcommittees. Thank you for inviting the National Conference of State Social Security Administrators, or NCSSA, to testify about the state's perspectives on Social Security coverage and payroll tax compliance by state and local governments.
Can you get into that mic just a little closer?
Sorry,
Thank you.
I will do that. To supplement our written testimony, I want to provide members of Congress with a couple of examples of the types of issues and concerns the state Social Security administrators deal with. A small town calls the state administrator in utter panic. The IRS's service center in Cincinnati is about to seize all of the town's police and fire vehicles for failure to pay FICA on their police officers and firefighters. The service center assumes Social Security payments were owed based on its review of 941 filings. The state administrator's records show that the town has a Section 218 agreement that covers civilian employees under Social Security but excluded police officers and firefighters. The state administrator intervenes and provides the accurate coverage and tax obligation information to the IRS, and they reverse their erroneous assessment. The town can continue protecting and serving the public. Another example is that in the early 1950s, a state provides public pension plan coverage for their employees, but not for employees of its cities and towns. The state legislature authorizes voluntary Social Security coverage for employees of cities and towns. The city of last resort enters into a Section 218 agreement in 1954. In 1961, the state legislature establishes a separate public pension plan for employees of cities and towns. The next year, the city asked the state administrator to file necessary paperwork with the Social Security Administration to withdraw from the Section 218 agreement so they can enjoy the new public pension plan. SSA approves the withdrawal from Social Security in 1965. If the city had waited to request permission to withdraw until the mid-1980s, the state administrator would not have even contacted SSA and instead would have advised the city that withdrawal from Social Security was no longer an option. These two examples show how the state administrator is the critical bridge or liaison and facilitator between the federal government, both SSA and IRS, and states, public employers, employees, and pension systems. Rather than being a one-way street and just sending information from the federal government down to the state and local governments, the Social Security state administrator is the key conduit of information both ways. Proper performance of that facilitator role, however, has been problematic since 1987, in part because of how the Treasury Department and IRS interpreted IRC Section 6103. The state administrators are no longer aware of non-compliant public employers. The lack of communication between the IRS and state administrators results in erroneous Social Security and Medicare coverage and benefits, as well as incorrect FICA tax assessments by the IRS. Since 2012, the IRS has identified approximately 10 major risk areas nationwide among state and local governments. The IRS cannot, however, tell state administrators what specific issues exist in their individual states. Thus, the state administrator cannot assist the public employers to voluntarily comply like they did prior to 1987. The valued partnership with SSA also needs to be renewed and reinvigorated. Prior to 1987, the states and SSA worked closely together to ensure proper coverage and collection of contributions. Since '87, the efficiency and effectiveness of that partnership has been erratic and has even at times resulted in inconsistent advice from different regional offices and the headquarters policy office. Further complicating factor is that the Governmental Accounting Standards Board, GASB, disclosure standards, and other auditing oversight organizational guidance standards do not test for Social Security or Medicare. As a result, when public employers receive a so-called clean audit, they have no idea that a potentially significant noncompliance area isn't even being examined. A FICA standard will account for 71% of state and local government employees' earnings nationwide that are currently not even reported on financial statements. In conclusion, the irony of the state administrator job is that when our role is performed properly and completely, it gives the impression that either nothing is being done or the job is minimal. To me, the job of state Social Security administrator is like a duck on a pond. Everything looks smooth and unlabored on the surface, but underneath you are paddling like crazy. NCSSA would appreciate congressional, SSA, Treasury Department, and IRS help with the paddling. I'm happy to answer questions. Thank you.
Thank you. As is customary, I thank you for your testimony. We'll turn to questions now. As is customary for each round of questions, I will limit my time to 5 minutes, and I will ask my colleagues to also limit their questioning time to 5 minutes as well. You've said yes to these questions, and it's clear that earnings information is the basis. Ms. La Canfora, this clearly is a complicated topic, and I want to be sure we all understand Social Security's role in this process with a few yes or no questions. Our time is limited, so just answer yes or no if you can. Is Social Security responsible for making sure that workers receive the correct Social Security benefit amount?
Yes.
Is the amount of benefits a worker receives based on his average lifetime earnings?
Yes.
And to determine a person's benefit accurately, does the person's earnings record need to be correct?
Yes.
You've said yes to these questions, and it's clear that earnings information is the basis for the most important thing Social Security does, paying the right amount of benefits to the right person. Yet, in your testimony, you say Social Security's role in the 218 coverage and compliance process is limited. Why is your role limited when these processes are at the very heart of your mission when it comes to correctly paying benefits for state and local workers?
Our role at the Social Security Administration is limited only to the extent that we cannot operate alone. But our role is both substantive and integral to making this process work. We just have to do so in conjunction with the IRS and the state administrator.
So you think the does the IRS have a collar around your neck?
I wouldn't say that, no. I would say it's a partnership between the three entities that are here testifying today. And I think Dr. Matza in her testimony said that the state administrators had a profoundly important role, and I would agree with that as being sort of the linchpin to making this process work, the state administrator role. But the Social Security Administration, as I said, also has a very substantive, integral role that we take very seriously.
Okay. Do you think the system is working properly right now?
I think, as you'll find out through this hearing, the statutory construct is extremely complicated, making it a challenge to administer perfectly, and thus employers do make mistakes in this area, and I'm sure there's room that we can all improve, but I think we're all doing due diligence to try to make sure that we're having this process work as well as possible.
Thank you. Ms. La Canfora, the bedrock of Social Security is that an earned benefit, workers pay taxes on their hard-earned wages for the promise of future benefits. But in your testimony, you said what matters is that a worker had earnings, not that they properly paid taxes on their earnings. Why is that?
The law stipulates that the way in which we credit earnings is based on the money that is earned, as opposed to the taxes that are paid.
Well, that has to be a drain on a trust fund since benefits are being paid without taxes ever being received. How often do you think that happens?
I don't know entirely how often we have errors, but I think it's safe to say that we uncover them rarely, and when we do, we try to address them in collaboration with our partners expeditiously.
Mr. Larson, you had a question?
Thank you, Mr. Chairman, and I want to thank all of our witnesses as well. And along the same line of questioning that the chairman had, Ms. Lancome, for Social Security is widely known as being the most efficient governmental program that we have. I believe your loss ratio, a term that is used in the private sector frequently, is at 1%. Is that correct?
That's a fair characterization.
Could you explain what that means in terms of the delivery of service and what that means in the private sector? In the insurance industry, in the private sector, they say between 70 and 75% loss ratio is a good mark to achieve.
I think a simple way of explaining it would be to say that our administrative expenditures, that is the money that it takes to actually run the agency, hire employees, and so forth, our administrative budget is less than 1% of our outlays or what we pay out in benefits.
That is correct. And along those same lines, and yet what we've seen consistently is that the budget for Social Security has fallen by 10% since 2010, while the number of beneficiaries, primarily the often referred to baby boomers, has increased by 13%. Has that placed a strain on the ability of Social Security to administer this very complicated program that we've been talking about this morning?
I think like all federal agencies, we have challenges. Our objective is really to try to operate as efficiently as we can within the constraints of the budgetary environment, and to try to automate where we can, and to try to improve processes and policies, which I think is what we're trying to do today.
Is there anywhere in the private sector where you could pick up an insurance plan that is as comprehensive as Social Security?
I'm probably not well qualified to answer that question.
Well, Ms. Lowe or Ms. Matza, if you want to answer that?
I wouldn't know.
Well, I can answer it for you. There is not, but nonetheless, I raised that point because this is an insurance program. The last time there was a premium increase in this insurance program was 1983. I ask everybody in the audience and all of our panelists up here, have any of your other insurance programs gone up since 1983? Have any of you seen an increase in what you had to pay in terms of a premium? I think we all know what the answer is. It's a resounding yes, they have. And yet Social Security, what we've managed to do is cut it back in terms of the services that we provide, while baby boomers are coming through the process. And we know from previous testimony that oftentimes the best individuals that are equipped to detect fraud are those that are taking in the front lines, who are in there doing the actual screening of citizens that take up Social Security. It's why, Ms. Matza, you were able to say you're like a duck that keeps in calm water, but there's an awful lot of paddling that goes on underneath. Point is that I'd like to make is this: we do have to continue. I applaud the chairman and both chairmen, because we have to be persistent to make sure that we're wringing out any kind of fraud, abuse, and waste. But in the process, we shouldn't throw the baby out with the bathwater, meaning we shouldn't be cutting back on quality employees that can actually assist and help better navigate these very complicated waters, and do it in an efficient manner with a 1% loss ratio that also provides these kinds of benefits. And I think when there's a final examination about what insurance is, and to look at the fact that there hasn't been an increase since 1983, and to understand that if you were making $400,000 a year, about 0.6% of the American people do, it would cost you less than this Starbucks latte to make Social Security solvent into the next century. And I know that's a goal of everybody on this committee. It's our goal on this side to talk about how we make it more efficient, how we root out any kind of fraud and inefficiencies, but how we expand this program, the most efficient government program that's run, so that it assists the American people in a way that they've become accustomed to, so that no one, especially women, can retire into poverty, that they get the COLA that they deserve, and yeah, even so that many seniors, because we haven't indexed this right, get a tax break as well. And with that, I'll yield back my time.
Thank you, Mr. Buchanan. You're recognized.
Thank you, Mr. Chairman. I want to thank our witnesses today. Ms. LaCamfora, let me mention, you said, just so I get a sense of this, you said that there's 23 million people that were a part of this program. Now there's 6 million. Explain exactly what you mean. There's 6 million that are still involved where the funds are being managed on a state basis or a local basis. Is that what you're referring to?
So there are 23 million people who are state or local employees in total.
Okay.
Of that 23 million, about a fourth of them, around about 6 million, are not covered by Social Security. And the reason for that is because the law gives states discretion about which of those public employees to cover or not to cover. And there's a wide variety of different scenarios across the state.
Okay, so they're paying into some various state, county. Who's managing the funds?
Well, all of the public pension systems at the state level are different. Some of them are statewide, some of them are not, so there's great variation there.
And how big of a problem do you think there is? I mean, with someone managing the fund, let's say someone puts in there 30 years they pay in. I grew up in Detroit area. Detroit went bankrupt. What happens to the funds, and then what risk does the federal government have if somehow it's mismanaged or the funds aren't there for workers' retirement?
I think that might be a better question addressed by the IRS.
Okay. Well, let me ask you.
So the state employees, if they're covered by a qualifying public retirement plan and they don't have a 218 agreement, they don't pay into Social Security. So the question, I think, is whether the plan is a qualifying retirement plan or is it solvent? I think that's the question.
The question is it solvent? It's kind of like what we did with Social Security in the mid-'60s. We commingled the funds and the general funds, and we have a trust fund, but there's no money in there. What happens locally if it gets mismanaged, there's not the funds? What responsibility does the federal government have with those workers?
Just like any other qualified plan, if it is covered by the PBGC or it's a question of whether it is fully funded.
In other words, if you've got 6 million people that their funds are being managed at the state or local level, if for somehow they don't get what they expected or what was going to be paid out to them over time, that's what happened in Detroit area, my understanding. What happens, what responsibility does the federal government have, if any?
So the IRS looks at the plans to see if they're run properly according to the requirements of the tax code. But if the funds are not properly funded, the responsibility is outside the IRS's purview.
Ms. Matza, let me ask you just quickly, you mentioned about the firefighters as one example. How big of a problem is it for these 6 million workers? I'm concerned at the end of the day, they paid in, their employer probably paid in, there was some kind of match. Those funds need to be managed. You want to make sure it's there. I agree with my friend, Mr. Larson, that Social Security, I think, is one of the best programs on the planet. You can count on it. I'm worried, frankly, about city, counties, and states mismanaging funds, and there being some question about whether they're going to get paid out. I've seen that happen on local level. So I want to get your sense of it. How big of a problem or challenge is this?
Thank you, Chairman Buchanan. I'd be happy to address it. I actually, one of my hats I wore before I retired from the state in January was to serve as a trustee for the Colorado Public Employees Retirement Association, the biggest public pension plan in Colorado and one of the biggest in the nation. And we recognized when the financial downturn occurred that the way the benefit structure was configured and the contribution rates were configured, we couldn't sustain it. And so we actually went to our state legislature. We came up with a game
We're
plan.
going to run out of time. I want to ask you one other question along
Okay,
that line.
but basically, most pension funds in the nation are not in dire straits. Unfortunately, Illinois is one of the worst.
Okay, but let's say Illinois has got a problem. Do they look to the federal government? Does the federal government, in your opinion, have liability if somehow it gets mismanaged for a worker in Illinois?
Not that I know of under current law.
Okay. Thank you, and I yield back.
Okay.
Thank you. Good question. Mr. Lewis, you recognize?
Well, thank you very much, Mr. Chairman. Let me thank each of you for being here, for your testimony. My question is for the panel, for each one of you. I understand that the tax code, section 6103, does not allow the IRS to share the name of the local government with state administrators when requesting information to ensure payroll compliance, tax compliance. Would each of you please share with us how the law made compliance difficult?
So section 6103 of the code does, you're absolutely right, doesn't allow us to share, unless there's an exception in there with specific taxpayer information with other federal agencies. But there is an exception in 6103 for us to share information with the Social Security.
You said there's an exception?
There is an exception under 6103L for us to share that with Social Security Administration. And we do share information when it becomes necessary with the Social Security Administration with regard to specific public employers. But we are not permitted to share that with the state Social Security administrators.
Ms. Monster, would you like to comment?
Yes, please. This is an area that has been problematic ever since 1987 when OBRA 90 went in, I mean, not OBRA 90, I apologize, since the federal responsibility for tobacco tax collection went to the IRS and previously state and local government contributions to Social Security were collected by the state administrator. NCSSA believes that it was inadvertent oversight when the Treasury regulations related to 6103 were adopted, because when 6103 was originally adopted by Congress, the state administrator was collecting the contributions, so it wasn't even thought that they would need to have them carved out as a separate classification. The fact that IRS cannot talk with state administrators and find out what information we have, which is extensive in our records. We have lots of interpretive documents and legal opinions that don't exist anywhere else. As a matter of fact, many of our public employers think that the 218 agreements and documents they have can be thrown out. We know they can't be. They're permanent binding agreements, and all the important information is in those files. The IRS, when they are, because of 6103, they can't reach out to us and find out all the coverage requirements for that particular entity. It would be far more efficient and effective for everybody, including federal and state and local governments, as well as save taxpayer dollars, if the IRS was able to contact the state administrator initially, find out exactly what the coverage requirements are under that particular 218 agreement, and also the particular pension systems that exist in that state, and any other nuances that exist. They can't do that. So it has really been a significant hampering of the efficiency and effectiveness of administering this program, in my opinion.
So you are suggesting that as members of the Congress and member of the Ways and Means Committee, we can fix it?
You can fix it. You absolutely can, and we would definitely appreciate it. And we would encourage you to work with Treasury Department and NCSSA and all of us. And I think everybody on this panel would recognize that that would be a vast improvement, because it would make all the difference. It would save tons of time and effort, and it would reduce the error rate dramatically, I'm convinced.
The other two members of the panel, are you prepared to say, yes, fix it?
So it's, implementing the tax law, we implement as they're currently written, and we defer. It's a matter of policy, and we defer with that to the Treasury Department.
Well, thank you very much. You want to respond?
No, I think my colleague summed it up well. I would say generally that information sharing is absolutely critical to making this process work well.
Well, thank you. Are you back?
Thank you. Thanks for your question. Ms. Wolarski, you're recognized.
Thank you, Mr. Chairman. Thank you to our witnesses for being here and lending your expertise. I appreciate it. Ms. Lowe, I just wanted to walk back through your testimony to make sure I understand exactly what we're talking about here. When the IRS receives tax information for a public employee, does the IRS know whether the employee is covered by Social Security? And then my question is, if not, so is there additional information that could help, and how would the IRS or other parties go about getting or setting up that line of communication? Is it just the line of communication that you're talking about here between the sharing that you've done? But help me understand.
So the IRS receives from the employers Form 941s and W-3 statements, and we can match to look to see if there's if the amounts that are listed on the 941 and W-3 match. We also get W-2 state returns for each employee, and based on the percent of Social Security listed on the W-2 and the wage amount, we can guess whether this employee has paid the correct amount of Social Security. But my office looks at the 941s and W-3 because we have jurisdiction over the employers, not the employees. And so we look at that, and if there is a mismatch between what they told us in the 941 and the W-3 filed, then they get an automatic reconciliation notice depending on the difference between the mismatch. But we also look at the 941s and W-3s to see if why there is less Social Security or the percent is so little, and then we look to see in our database that Mariana just talked about was about whether there's a 218 agreement or not. And based on those filters, we make a determination whether the employer may be potentially non-compliant, and we reach out with regard to some compliance action, which could be a compliance check or an audit. But on the face of the returns, we can't with certainty tell whether all the employees of that public employer were appropriately covered or not.
You can or can't?
Cannot.
Cannot. Okay, so short of an audit that you just mentioned, you really don't know whether an employer reported and paid the correct amount of FICA taxes without an audit. And is an audit the only fail-safe mechanism here?
Fail-safe, yeah, without an audit, short of an audit, that's the only way for us to know certainly, by 100% certainty, whether the employer is covering all the employees appropriately. But we do provide extensive outreach, and we have a questionnaire and an assessment tool that the employers can use to have a checklist to make a determination whether a group of employees should or shouldn't be covered. We do webinars. So and for the most part, this is a very compliant employer base. If they do make errors, like my colleague from Social Security Administration said, most of the time it is because of the complexity of the laws and the lack of understanding. In my opinion, there's no aggressive noncompliance or trying to hide. It is basically an education up front by all of us, and also an audit at the back end to do the checks.
So since there's not an audit on every single person, since you do some of this sharing of information back and forth, and it is a result of this massive complexity of how this thing is tied together, which I think reiterates again how badly we need reform in a much more simple kind of system than we have now. But so short of an audit, there's really no way to tell for sure if these records actually match. And what do you think the error rate is? I mean, that comes through your office. Is it 10% of people that never get matched up, or is it 5% of people that don't get matched up and don't have an audit? How many just percentage do you think are out there where we never actually get this right?
I really don't have the percent. I'll be happy to get back with you on the exact change rates that we have in an audit. But I do want to reiterate that the changes we do see are generally as a result of not understanding the rules.
Of the complexity.
The
right?
complexity
Right.
of the laws and also not only the but also the various timings in which the laws came and when the employer came on board, the employee came on board. So that makes a difference also.
I got it. And I appreciate it. Thank you, Mr. Chairman. I yield back.
Thank you for your testimony. Ms. Sanchez, do you care to question?
Thank you, Mr. Chairman. And I want to thank the witnesses for being here today to provide us with some insight as to what you deal with. Social Security lifts many millions of Americans out of poverty. And after a lifetime of hard work, every American deserves a peace of mind to know that they're going to be able to retire with a little bit of financial security and a little bit of dignity. For 94% of American workers, knowing that Social Security is going to be there when they retire is a great peace of mind that they can carry with them. But Social Security generally doesn't cover state and local employees. For example, in my home state of California, there are 1.3 million Californians who are not covered by Social Security who likely participate in the California State Retirement Plan, or CalPERS as it's known. For them, knowing that CalPERS will be there in retirement provides them with the same sense of security. But there are cities or school districts that can sign agreements with the Social Security Administration which specify that certain state and local employees will be covered by Social Security. And these agreements might say that principals are not covered by Social Security, but administrative staff is. And so they can get a little complicated. And the IRS is tasked with enforcing these agreements, but they aren't always able to take proactive steps if they find that there's a problem. I know that this particular case happened in DC, but I can't imagine how troubling it would be for a worker to find out that after 10 years of work, they had not been paying into state retirement or into the federal Social Security program. And I am, glad that the DC's own audit discovered that, and they quickly corrected that. Most of us here today just want to make sure that this isn't happening in our districts or that our constituents aren't similarly affected by technical mistakes like this. And it's our job to try to figure out ways to make it easier to identify these issues early on to prevent that kind of situation from happening again. So I'll begin with Ms. Lowe. If the 218 agreement assessment project, the IRS identified some risk areas. I understand that the IRS can't work directly with the state Social Security agencies. So how does the IRS handle those situations? What kind of proactive steps is the IRS able to take? And are you able to inform the city so that they can take some remedial action?
So with the risk areas, our first step is to try to educate and do outreach on areas where we see that employers are having non-compliance as a result of not understanding the rules. So we do webinars. We have a very robust education tools on our irs.gov, and we also have a desk guide that we have. It's pretty lengthy, and we worked with Social Security Administration to have the desk guide, which is on our website, which is available and then we have approximately, the agents that are a little over 50 that are spread throughout the country, and they have built good relationships with their state Social Security administrators and the employers, and they're available to answer questions when employers have those questions. Although we can't talk to state Social Security administrators about specific taxpayers, we do have conversations with them on general questions when they reach out to us. We have quarterly meetings with the Social Security Administration. Regularly we attend meetings with the National Council of State Social Security Administration. So our first preference is always outreach and education.
Okay. Do you know roughly how many 218 agreements the IRS helps to administer?
We are not party to the 218 agreements. We just get copies and we look at them to see who is covered or not, so I wouldn't know the answer.
You don't have an answer. Can you just tell me in the little remaining time that I have, how have budget cuts impacted your agent's ability to perform compliance checks?
So resources are always an issue. You know, we have had attrition and resource, but we do the best we can. And as I stated, the best way to make sure there is voluntary compliance, which is the federal tax system, is that employers voluntarily do their correction and comply with the rules as education and outreach. So we do that with the best use of resources is like doing a webinar. Do it once and put it out so people can listen to it. And so resource is always an issue, and we try to allocate them appropriately.
Great. Thank you so much for your testimony today and for your answers, and I yield back.
Mr. Bishop, you care to testify?
Thank you, Mr. Chairman. Yes. Ms. Matza, I understand that under Section 218 of the Social Security Act, state, local governments may extend Social Security benefits to their employees. Can you give us more information about exactly what a 218 agreement is, what's in it, and what type of information is included in an agreement like that?
I'd be happy to. The basic information is that the Section 218 agreement with each state was entered into originally, usually in the 50s, and that's what we commonly call the 218, Main Master 218 agreement. Modifications to that agreement are made to add employers and their employees. The agreements are contracts, effectively, between the state and the Social Security Administration. No individual state or local government can enter into a 218 agreement independent of going through the state because of Section 218 of the Social Security Act, and that's why the state administrator is such a key liaison with administering those. The agreements basically outline that the employer understands and appreciates that since 1983, once they enter into a Section 218 agreement, it is a permanent binding agreement. They can no longer withdraw. Prior to that, they could withdraw from coverage with a 2-year period and approval from Social Security Administration. It includes what positions that are employed by that employer are to be covered under Social Security. Sometimes there are optional exclusions that they choose. Some of the most common ones are student, optionally excluded. And there are obvious things like mandatory exclusions that are just in federal law, like emergency workers during a flood, for example, are automatically excluded. It includes the effective date. It includes, basically, typical terms and conditions of a contract, saying going forward, this is how it's going to be. And then we submit the agreements. The state administrator does all the work up front, works with the employer, educates them about what they need to know to make an informed decision because of the mandatory Social Security provisions of over 90, and that they don't have to be permanently bound to Social Security if they fall under over 90. So basically, it's a contract that outlines who's covered, who's not, and effective dates, and agreeing to be taxed.
Okay, thank you for that. So there are a lot of sub-entities, local governments. Each state has one agreement then with several sub?
It's a master agreement that has been modified over the years. For example, in Colorado, where I'm from, there's about 750 agreements. There are states, I can't think of some of the numbers, but there are states like the GAO report in Appendix 2 documented that virtually every public employee in Vermont, there's some exceptions, are covered under Social Security.
But it's one agreement per state, and there are subsections.
It's one agreement. That's exactly right. Yes.
Okay. What triggers a modification? What exactly? What's the process?
It can be a variety of things. It can be a change in state law, for example, where let's say a state that has added a new pension plan, they decide that in addition to the pension plan, they actually also want Social Security coverage. So in that case, the state administrator would amend or
Okay.
modify the agreement?
Okay, thank you. That's helpful. I so little time, but
I know.
Yes, I'd love to hear more. Ms. Lowe, a 2010 GAO report on Social Security coverage for the state and local governments noted that the IRS has a database of public employees. I just wondered how the Social Security Administration validates the database and what it's used for.
So we have a database, like my colleague from Social Security Administration said, of the modifications and the master agreement. So we know, to the best that we can, when we are provided the modifications every time there's a modification that occurs. But we can't be 100% certain we have all of them. So we've created a database, and if there's a mismatch, if the 941 shows very little Social Security coverage, we look to see if there is a 218 agreement or not, whether we should do a compliance action or not. No, we don't validate with the Social Security Administration. It's a matter of resources for Social Security Administration and IRS to go over that. Given the fact that this is a largely compliant taxpayer base, it just comes down to resources.
Thank you, and I yield back, Mr. Chairman.
Thank you, Mr. Pascarell. You're recognized.
Thanks, Mr. Chairman. Great to see you back. Thank you. Mr. Chairman, I want to commend this panel, particularly when public employees have been under so much of an assault. I mean assault. Over the last several years. You come before us objectively, knowing that everybody on this panel is on some bill or other to cut waste and fraud in government. That's a given. But you've stood tall today. I really appreciate what you've done and what you are doing. And at the same time, we know that the Social Security Administration's phone service has so deteriorated over the last 10 years. Why? Because they don't have enough people. I mean, they didn't decide to talk to one another and say, I'll only take 2 phone calls today. I'll be busy the rest of the day. No, they have their schedule every day. I know this. So, to get back to the major topic, retirement security is essential for all Americans. I think Mr. Larson pointed that out dramatically. And for those workers who rely on retirement funds other than Social Security, which you're talking about today, they need that certainty, they need predictability about their retirement income. So ensuring compliance with agreements about how state and local government employees participate in Social Security can help provide this certainty. In order to have robust oversight of compliance, you have to have well-trained personnel in place to do it. You've got to have training programs. You've got to make sure that people participate in those training programs. So this is not a sexy discussion today. I don't know if the media will even cover it, because to them it's immaterial, because it's not sexy. But this is critical to a lot of people. And I thank you for what you're doing. Many times I've said this, in the context of the IRS, Medicare, Social Security, my friends on the other side, and I call them my friends, they know that, cannot continue to make deep cuts in agencies, operating budgets, or the resources, and simultaneously expect to have a world-class service. That's what we want. That's what you're capable of. So training for the administration of state and local coverage and tax compliance is critical. Dr. Matza, let me ask you this. In your written testimony, you discuss a shift in the training in Section 218. And the oversight in many states, as well as within the SSA and the IRS. You attribute these changes to funding reductions. Can you discuss the shift and give us a sense of how it has impacted the quality of this training.
Thank you, Congressman. Yes, I'd be happy to. The lack of resources at SSA and IRS because of limited funding has dramatically impacted their ability to help state and local government employers and employees comply voluntarily. And as Ms. Lowe indicated, it is a group that wants to comply.
You provided in your written testimony, you made certain recommendations.
Absolutely. We would like to see...
Tell us all.
We would like to see grants from Congress that go to the states, SSA, and IRS so that we can conduct ongoing education and outreach to make sure that these employers and employees know exactly what they need to do, when and how to do it, and they will comply. When Pub 963, IRS Pub 963, the Federal State Reference Guide was first published in '95, IRS documented that within the next 4 years, voluntary contributions to the Social Security and Medicare trust funds skyrocketed. That's important.
Yes, I want to thank the gentleman from Georgia who brought up the question about, and you elaborate on 6103, which is my favorite part of the tax code. I wonder why.
It's certainly not our favorite.
I know. Thank you.
Unless you change it.
Thank you.
Thank you. Mr. Rice, you recognize.
Ms. Motza, who do you work for?
I am gloriously retired. I worked for the state of Colorado for over 41 years, and yes, I was hired before child labor laws went into effect. That's why, but that's a joke. I'm here representing the National Conference of State Social Security Administrators because I was the state Social Security Administrator for nearly 24 years for Colorado.
Who does the Colorado State Social Security Administrator work for?
It's actually in the Labor and Employment Department, and it was placed there as a fluke. There was 2 years, my understanding, at the beginning of the 1950s when the Social Security Administration at the national level was under the U.S. Department of Labor. So I think the state legislature there just took the easy out and said, well, let's throw it in the Labor Department.
So that's the Colorado State Labor?
Colorado State Labor and Employment.
Not federal, it's the state. You work for the state.
It was the state. It's part of the state, yes.
So do all of the state Social Security administrators work for the various states and not the federal government?
Absolutely, and we want to keep it that way because of the 10th Amendment. The independence and state sovereignty is important. Each state was given the option under Social Security Act based on Section 218 to determine what configuration of coverage for their employees, their public employees was necessary.
Okay, so what's the function of the state? So does every state have a state Social Security Administrator?
They are required to under federal law. Unfortunately, because of funding cutbacks and since the transfer of responsibility for collecting contributions in '87, a number of states, I'm sad to say, no longer take that job seriously, and that's one of the things we would encourage Congress to help us with. We would appreciate a resolution or something that gives us clout to say to state officials that this is a vital and critical role, an important role that helps not only the public employers and employees, but taxpayers.
So not every state has one.
They do have a named official, but are they active? Not necessarily.
All right, so federal law requires that every state have at least one, but they're not paid for by the federal government.
No, they're
so in some states, you say there's only one person that works for this entity, this group, and in other states, do they have big staffs?
No, in most, they used to have big staffs when they were collecting the contributions, but most state officials, it's 1 or 2 people. And in very many states, it's a portion of a job. It's been really relegated to.
Okay, so you're saying that some states don't even have a full-time person in this?
No, and many do not have a full-time person.
And it's the job of this position to be an intermediary between the federal government and the state and local governments.
Absolutely, and to know exactly what's going on at the federal level and within their own state to make sure that they're reconciling and they're staying compliant.
When you did it, was it a full-time job?
Part of the time it was a full-time job. Other times I was wearing other hats.
Did you, in the course of your undertaking this activity, frequently find municipal governments and county governments that thought they were complying with the law but weren't, as we've discovered here of late?
Yeah, and we, early on, when I took on the job in '93, I was very fortunate to have an excellent executive director of that department.
So that was a frequent
training and outreach.
That was a frequent thing that you found people?
It wasn't frequent, but it was enough.
Was it once a year, every 2 years, every 3 years?
Pardon me? I'm sorry.
Was it annually that you found somebody who thought they were complying with the law?
Initially, yes, and then again, once Pub 963 came out and they had a clear understanding of what was necessary and appropriate, the noncompliance was less, and we were doing education and outreach jointly with IRS and Social Security that really enhanced the improvement rate.
All right, Ms. Lockhand, for it, IRS does most of your compliance testing, right?
I'm sorry, can you repeat the question?
The IRS does most of your compliance testing, is that correct?
That's correct.
And I'm out of time. I'll yield back, Mr. Chairman.
Well, thank you. You can go ahead and get an answer to that question because I'd like to hear it.
Well, my next question was going to be the way that you determine whether or not somebody's in the Social Security system is just from their 941s and their W-2s. Is that right?
So as Ms. Lau described, there's a reconciliation process to determine whether the employee wage reports match up with the employer tax return.
Well, here's my question. Do you have cases with relative frequency where people have not had Social Security withheld from their paycheck and that you determine that it should have been and you go ahead and pay them their Social Security benefits?
Not with relative frequency, no.
Okay, thank you.
Thank you. Ms. Delbene, you're recognized.
Thank you, Mr. Chair, and thanks to all of you for being with us today. For more than 80 years, Social Security has kept seniors out of poverty and provided a vital safety net for our middle class. But unfortunately, due to a legal technicality, tribal governments are currently prohibited from entering into agreements with Social Security Administration to allow their elected leaders to participate in the program. This makes elected tribal leaders one of the few classes of Americans that are prohibited by law from paying into Social Security and receiving benefits from it. I believe that's unfair and punishes tribal members who wish to give back to their people through government service. And that's why I, and along with my colleague, Congressman Reichert, my Washington State colleague, Congressman Reichert, introduced the Tribal Social Security Fairness Act earlier this year, allowing elected tribal leaders to opt into the Social Security program. There's really no reason the same benefit shouldn't be extended to tribal leaders who choose to participate, putting them on par with pretty much every other American. And so, Ms. LaConfora, do you, I assume you're very aware of this issue, and could you tell us how you feel about allowing elected tribal officials to be able to participate and contribute to the Social Security system in the same manner as every other American?
I think you explained it very well. The legislation that you're referring to would allow tribal governments to voluntarily opt into Social Security coverage, and we would be happy to work with the committee to provide any technical assistance you may need.
And do you agree that this is a technical issue in terms of why they have been excluded?
I think there could be views on various sides of the issue, and I don't think we have a particular position on it, but we can certainly provide assistance as needed.
And I want to thank both the IRS and the Social Security Administration have provided technical assistance to the drafting of the legislation we put together. Ms. Lau, do you believe this legislation or legislation like this would have a positive impact on Indian country?
I defer this is a policy issue, and I defer that to Office of Tax Policy, and we're willing to work with them to implement anything that's enacted.
Thank you. This legislation is really about equity for tribal nations and removing barriers from talented Native leaders who really wish to serve their communities. And all Americans, I think we can all agree, all Americans deserve to retire with dignity and economic security. And I'll continue to work in a bipartisan fashion like this legislation was put together to advance forward-looking reforms that improve Social Security for all Americans. Thank you for your time, and I yield back.
Thank you, ma'am. Mr. Carvello, you're recognized.
Thank you, Mr. Chairman, for allowing us the opportunity of this hearing, and I thank all of the witnesses for their testimony today. Ms. Lowe, 70% of taxes collected are payroll taxes. Does that sound right?
Yes, 70% are payroll taxes, but that includes individual income tax as well, that's 70%.
Well, given that significant number, it seems to me that this should be a compliance priority for the IRS. Does that make sense?
Again, so it is a compliance priority for the IRS, the payroll income tax. But 70% of the tax that is collected, I just want to make sure I understand your question. 38% is the income tax part of it, and 32% is the Social Security and Medicare type part of the 70%.
I understand that, but either way, we're talking about at least around a third of total collections. So my question to you is, what percentage of audits conducted by the IRS are related to payroll taxes?
So a large number of, this also includes public and private government, public and private employers, and I have jurisdiction over the public employers, which are about 90,000 government entities. So we do audit, we audit a few hundred per year, but we also provide extensive outreach to these government entities. That can be small towns or large states and cities.
So do you have empirical evidence that this is indeed a compliant group?
From basis of the audits that we've done and our relationship that we have with the state and local governments, my opinion is that this is largely a compliant group, not that they always meet 100% of their requirements, but the reason often is because of the complexity of the rules and lack of understanding of where the employee falls, whether they are covered or they're not, whether they're under a qualified retirement plan, when did they start working, was there a break in service? So it's an exceedingly complex area of the law.
Well, we've heard many examples over the years of local employers being non-compliant. So I just want to make sure, and I understand the issue of resources, and I certainly believe that we need to make sure not just the IRS, but the entirety of our government is adequately resourced. But it does seem to me like we're leaving a significant amount of money on the table, and I still wonder if there is a focus on enforcing compliance in this area, given that it represents around a third of collections for the IRS.
So the IRS does have a robust payroll employment tax audit program, whether it is private or public employer program, but commensurate to the amount of resources we have. But for the public employers, I just want to make sure that 1 in 5 employee works for the public employer. So the large portion are private employers, and public employers are largely a very compliant area of the very compliant taxpayer base.
Thank you, Ms. Lowe. Ms. Matza, a question for you. I want to focus on this issue of classification. What role specifically do state Social Security administrators play to ensure that workers within the state who are covered by Social Security are properly classified? What oversight role should state Social Security administrators play in this process?
Thank you, Congressman. Ideally, the state and local governments should contact the state Social Security administrator to verify what their obligations are under both federal and state laws. and they should, also, the state administrator should also monitor changes in pension laws in their state to make sure that pension laws that are being changed or have been changed aren't causing confusion and causing somebody who is under a 218 agreement and must continue paying into Social Security to suddenly stop and join a pension plan. So as far as classifications, it's just a matter of advising them that if they have a 218 agreement, certain positions are covered under Social Security and others are optionally excluded, or whatever the case may be.
And quickly, do you think that SSA and IRS can do more to support states in getting this classification issue right?
Yeah, I think that, again, it's back to our bugaboo, 1987. If we could communicate more openly and directly up front, I think it would make it easier on all of us and certainly would save taxpayers money, because everybody that we are dealing with is funded by some form of tax.
Thank you very much.
Time of the gentleman has expired. Mr. Reichert, do you care to question?
I do, Mr. Chairman.
You're recognized.
Thank you. I thank Chairman Johnson and Chairman Buchanan for allowing me to make a brief appearance today at your hearing. I'm not on either committee, but I am on the Ways and Means Committee, and I chair the Trade Subcommittee. So I appreciate this opportunity. Thank you both. I'm going to follow up with a line of questioning that Ms. Delbeni was pursuing. And excuse me, as we've heard today, state and local government employees may participate in Social Security through voluntary coverage agreements. However, no such option exists for members of tribal councils. And I know that's been discussed briefly. I understand in 2006, the SSA issued a policy ruling clarifying the tribal council members cannot receive Social Security coverage because of a 1959 IRS ruling, which states that service performed by tribal council members do not constitute employment for FICA purposes. While the SSA says that this clarification did not represent a policy change, the effect was that tribal council members could no longer contribute to Social Security or have their earnings count toward any future benefits. And the real question I have, as you might guess, Ms. Lacafora, close enough? Why did it take SSA over 45 years to provide clarification on this issue? So from 2006 to 1959, what took so? What was happening in the meantime?
We oftentimes put out clarification when questions arise, and my understanding is that tribal council leaders were not paid by tribal governments until the 80s, and we really didn't receive a lot of questions on the issue, and it was only when questions began to come into the Social Security Administration that it was clear that we needed to clarify what was always our longstanding policy.
You don't do systematic reviews of policy or anything that may be controversial or disconnected within the organization?
We do, but again,
Audits?
we generally clarify issues when questions arise, and in this case, around 2006 was when it became very clear to us that clarification was necessary on that particular issue.
So now we have a problem. You've identified a problem. How do you think this problem should be addressed?
As I mentioned in response to the earlier question, we would certainly be pleased to support you with any technical assistance on the legislation that you've proposed.
Okay. So I would guess that you would agree this is an unfair policy that's been in existence for these past number of years?
We don't have a position on the policy itself, but again,
you'd be happy to help us correct it?
Absolutely.
Whatever the problem is? Okay. I think that the situation has created an unfair environment for our tribal friends. And I've heard from tribal council members from the Muckleshoot tribe in Washington State and others across the country. They want to participate in Social Security, and I think we need to make that happen. I have introduced a bill to make this possible, so I will have my staff reach out to you and look forward to your cooperation in resolving this issue.
Thank you.
Thank you. I yield back.
Thank you. I appreciate the testimony of everyone. As we've heard today, Social Security and the IRS don't have their act together when it comes to state and local workers. Social Security doesn't know whether state and local governments are reporting the right amount of wages, and Social Security counts earnings toward future benefits even if taxes weren't paid. The IRS doesn't know whether an employee, employer, or worker is paying the right amount of payroll tax. When errors go unnoticed for years, like in Missouri, this has a real effect on workers' retirement security and on the trust fund. Social Security, the IRS, and states must accept responsibility for the roles they play in making this process work the way it should. I think y'all would agree. Americans deserve nothing less. I want to thank our witnesses for your testimonies. Thank you so much. And thank all the members for being here. With that, the subcommittee stands adjourned.